Hello guys, welcome to the Trading Parrot. It's Monday morning and I'm gonna do a bold statement. $1.6 billion in losses just in crypto overnight. And I will say that most of that is because of people that were trading the interest rate cut with expectations of just going into the moon with the first cut. Well, you can see what happens when too many longs are pointing in the same direction. In yesterday's video, the weekend alpha, I made sure that you understand that we are currently in an arm wrestling of 3 white soldiers versus 3 crowds. And we can see so far that my bear flag, it is just starting to potentially do the first hit. This video went out 12 days ago. As soon as I came back from holidays, I made sure that the return of the Parrot keep you up to date with everything that's really going on. Think about your poor friends, those ones that do not watch the Trading Parrot. What kind of hopium are they absorbing every day from mainstream websites, YouTube channels with more than 1 million subscribers? All of this crap, all you have to do in a day like today is burn it all. Never ever read mainstream websites, never ever watch websites with more than 1 million subscribers unless you really want to dig a deeper hole in your pocket. In today's video, we're gonna deep dive into everything that happened in this small correction so far. I am not saying that we are yet in the middle of a deeper correction, but some things are eroding under the carpet, and you, my friend, you deserve to know that you shouldn't have been long in the past few days, and now you know why. At least we know that there can be a deeper correction, so let's assess the possibility of that. Let's see if we should be dipping our toes in a small long as well. It's fantastic to wake up on a Monday fresh with cash thinking, I'm gonna start browsing around and see what I can pick up from the blood in the streets. Maybe I get a little bit more picky and I wait a bit longer, but no damage. But there was one thing I got wrong. I let my break even close my short. I think I should have let that short rally for longer now that I think of. But hey, I can afford mistakes. What I do not afford is losses. And particularly in my trading style, they don't go often hand in hand. I afford mistakes, but I don't take losses. So if you want to learn this, keep watching the channel and keep learning. And if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. Write down a comment down below. That really helps the channel. Can we get to 1,000 likes this morning? I'm sure we can. We probably deserve all the likes of crypto. All of them. They should come to this video. But be careful what you wish for, because we are still a niche and we are still always on the money. I'm not sure we're gonna be if we become too popular. But still, let's get to 100,000 subscribers. It's long overdue. What we should be there. And a lot of people that have more than 1 million, that deserve just 10 subscribers. Guys, if you want to trade in a great exchange, not just trade on the money, but also use a decent one, 2bit is a great choice. Non-KYC or KYC, that's your choice. 2 minutes to register, and as soon as you register, guys, you get $50 for free, even before depositing anything. Now, if you deposit and you start trading with volume, you can get up to 30,000 in rewards. You get access to all the old coins, 200x leverage that I will never use myself. You know, I trade most of the time with 3-5x. That's all I need. But whatever you want to do is available to you. And just a few minutes ago, well, alert is saying that 250 million have been printed. And I remember a couple of days ago, there was a huge print from USDT as well. In general, these are bullish events because it means that there's some additional demand to enter exchanges. The one in USDT happened prior to the correction. So I will suspect that that huge amount of money was already partially used for long positions and now they are bleeding. I suspect that today there is a ton of people that haven't yet been liquidated. And I want to consider that as an important factor because 1.6 billion got liquidated, but there is a chance that we could get another wave of liquidations. It's not guaranteed. I'm not gonna tell you that that is what my balls are seeing, but it's something that I wouldn't feel comfortable to finish recording the video and not tell you. Let's see what Titan of Crypto is saying. Bitcoin Weekly Outlook. He's using Ichimoku analysis, which is something that I do not use, but I like to see analysis on other indicators, even if I'm not very familiar with them. BTC faced rejection at the 110 can. The bullish fair value gap now acts as a crucial support zone that must hold to sustain momentum. So that 112 is the first line of support that we highlight in the previous videos. I talk about 112, 110 to 9, and then that 107 that is very, very relevant from the point of view of liquidations. Yeah, I'm talking about this one right there. Remember, we highlight that the 120, there was very little left over, so chances of pushing slightly higher were kind of dying with every single attempt. Failed. We got some bull analysis in here coming from Calev. Interesting, the bull flag regression is intact. The breakout, retest, rebound setup is intact. The VWAPs from the June and August lows are intact. Those are anchor VWAPs from those lows, and they are currently acting as support for the middle or the median of this channel down. Yes, it is support. I'm not gonna say that's not support, but as with any support, it can fail, right? Incredible. CoinTelegraph has fully focused prior to the crash on every single thing that is bullish. They never ever got any hot stories with bullishness. You could say, is the actual magazine doing that? Or you could say, is sort just by popularity and people are just consuming this hopium, pushing only the bullish articles to the top. That's why people sometimes don't want to watch my videos, because I have some of the time contrarians. We took longs and shorts in the past 2 weeks, but I remain very cautious, and now you can see why. So according to Gemini, today's news are extremely bearish. 3 out of 3 are bearish. One of them very bearish. 1 out of 10. I don't think I ever seen one of these, but we just moved from ChatGPT into Gemini, so let's see. Empty Ghost Trusty announces in-kind Bitcoin and Bitcoin Cash repayments to begin this week. This was published precisely today, and we're talking about distribution of 142 BTC, thousands, starting from September 24th, which is around, I think is Wednesday, and that is causing severe market anxiety. Of course, there will be plenty of articles denying that this already happened, that it will happen more in the future, that many of these people are not gonna sell. It really doesn't matter. The point is you drop a news like this and it generates some effect, and that effect could or maybe may not affect that much the market, but it is already doing some damage. 3 out of 10, German government moves another 1000.5 BTC, 1000 again to exchanges, seize from movie to K operator. And remember that Germany was distributing everything that they seized. They lost a lot of upside by doing that. They could have pretty much doubled their holdings in euro value if you want. So some people might say that this time they're not gonna distribute it. I will do the opposite. Actually, I will have held the earlier Bitcoin and sell the one that is over $1,000, right? It's just a matter of buying low or holding low and selling high. Over 500 million in long positions liquidated as Bitcoin tumbles to 111k. That is liquidations of Bitcoin. We have 1.6 billion of liquidations across all longs of all cryptos, all exchanges. Of course, you can see it in here. That's the most recent figure of longs. It's actually 1.7 in total, but that's including the shorts as well. You can see the magnitude in the past month of this bar. This is 12 hours, guys. It's disgusting the amount of liquidations of longs. You can see that we didn't have any other event that big, and we are in a period of excessive amount of longs liquidations, and these seasons of longs versus shorts liquidations do not last forever. So if you're considering now to take a short to liquidate more longs, that is an elevated risk and stress for your short if you do it from now. Incredible, I have to say this, but there will be plenty of people shorting this because of all the bearish news that are being put again out there, and they're gonna get dropped to the other way around because there is liquidity on the upside and things can go higher if too many shorts enter the market. Guys, when are we gonna understand the basics of market maker movements? Have a look at this chart. Futures long short liquidations dominance. What can you see? It's a zigzag, right? Up and down, up and down. And the most important thing is It's not that it goes up and down. It's how long do we stay in one side before we go to the other side, okay? And this is kind of the curve of the love sharing that market maker likes to spread. So around July, it was excessive amount of shorts, okay? We talked about that before I went for holidays, right? And what did we say? That with this excess, that was the largest amount of liquidations of shorts in the whole bull market, that we should be getting now longs liquidated, right? So if you took a long, you should be slapping your face. And the same goes with this. We had now excessive amount of longs liquidated. Can we get another wave? Yeah, there can be 3 peaks in here, but eventually we exit from that and there is a sharp move down and that liquidates longs and so forth. It never stops. Oh my God, this video is gonna be packed of information. I got so many different things I wanna share with you guys. Make sure that you look at the timestamps in the description, because if this video ends up being 1 hour, I don't give an F. I care about you guys and I want you to not miss the important things. If you do not have time, you can subscribe as a patron and you get a summary every day with every Bitcoin video into your inbox. If you subscribe for BTC articles, if you go for Elite, you even get that with summaries for the altcoins, and you get to join the private TA sessions on Thursday. This Thursday we have a PineScript event as well, 1 hour, where I teach you what I've learned about PineScript in the past years. You even get to choose which questions to ask live. My Patreon link is in the description. Primary reason for today's Bitcoin crash, according to Gemini, obviously that comes from the news. The main reason for Bitcoin's sharp decline, nearly 111 today, is the imminent distribution, of course, of the 142,000 Bitcoin, approximately $15.5 billion, to creditors of the long defunct exchange Mt. Gox. We talk about that, and I ask, what about Germany sees BTC? Remember that this is also on top of what happened with Japan. We'll cover general markets, macroeconomy, to see what else is currently making noise in the background that is even more important than whatever crappy news you're getting in mainstream. What about Germany sees BTC? Hasn't that been distributed already? Or, well, in fact, it's just 1.5k Bitcoin, so it's not that much compared to Mt. Gox. The vast majority has already been distributed and sold. So this doesn't have the firepower that initially it had of 43,000, so we shouldn't care that much about that one specifically. Of course, I ask every day before doing a video to my community for questions. What are the likely triggers for this dip? Where is support, liquidity? We cover all of that. And where is BTC dominance? I suspect that it must have gone up, but I haven't checked yet, and that probably means that the alts are bleeding big. What I saw is that the altcoin season index went to 100, and I don't even know if that is something broken in the indicator or if we really pierced that level for first time in history, as far as I know. Pretty exciting. Eric is asking, I will be very happy if you can enlighten us with your view on possible levels of DCA down. Believe me, Eric and Sam, this is my main focus at the moment. I keep looking at the price that now is 112.2, and I'm getting very itchy to start building my DCA position as people distribute based on the fears of Mt. Gox. Oh, life is amazing. Let's look a little bit outside the bubble and let's see macro. How is it doing today? Remember, 1 is bearish, 10 is very bullish. We got the why it matters and the source on Bitcoin. So we got the trade war. Turkey eases some US tariffs. That's today. 6 out of 10 is kind of bullish. Anything that slows down on tariffs on trade wars, of course, is bullish. Tariffs hitting demand. ECB study. Euro area consumers are shunning US goods and cutting discretionary spend. The global growth drags with that. Oil and geopolitics. Mid East and Europe tensions nudge crude up. That is 4 out of 10 is bearish. Cost push inflation risk keeps real yields sticky. Risk assets chop. And we can see market opened in general markets today slightly in the red. I guess futures were in the red, and that was already also pushing a little bit more to the downside on Bitcoin as well. China keeps LPR unchanged. And remember, in the past week, we also have in Japan held the rates to sell ETFs and rates. Less global liquidity carry tailwind. The yen confirming can pressure risk. And in terms of events in the economic calendar, we got a bunch of things starting from Tuesday. There's nothing on Monday. We have Powell's speech on Tuesday and some events in the USA by the end of the week, including the core PCE, personal income and spending, durable goods, and a bunch of additional events as well. Remember that on my Telegram channel, you can always join for free. The link is in the description. Do not search for it because you're gonna find 1,000 scammers before you find mine. All the links are always in the description, and from there you can click TTP charts and see all my charts live anytime, 24/7. You get 1 or 2 a day for free, or you can subscribe if you want to get unlimited access to all charts of Bitcoin, general markets, and altcoins. And well, now we understand a little bit better maybe why the Fed is being hawkish and more towards quantitative tightening. As you can see in here, they are now at 3.07 trillion in amount of holdings in the balance sheet, and that has historically been bearish for Bitcoin and risk-on assets. The aggregated open interest continues with a flag to the upside, the only one with this anomaly in the whole bull market that I've been speculating that just because it's so different, it could end up behaving also in the exit differently to the rest of the flags. Because, for example, the megaphone pattern went down, this went down, this went down with lower lows, lower highs, and this one has higher highs so far and higher lows. Even with the retracement today, that's still a higher low. And that tells me that if this was to blow up in our faces, it's got a different potential than this one. It could blow up to the downside. September now is at 4% in the positive. We bounced from 111, 1.5k up. So at some point, this must have been very close to break even, right after being at the highest level that we ever been for a closing price. We went, I think, to 8% at some point. I think it will be still great if September can hold like this in positive in the green, because a green September so far in history has led into additional green by the end of the year. Let's look at CME gaps, and one of the things that has got me pretty happy is that we have here some CME gap, right? But this is because it tracks the price at open as midnight, so it's kind of a mixed bag. I do not consider this an appropriate CME gap because it should be produced by the Friday close, which was this candle in here Friday at night, right? So around 115.4 priced in Binance, and we open with this candle on Monday at midnight, so it's around that price as well. So you can see that those two prices, Friday and Monday, are overlapping. So I consider this maybe a broken Pine script that is printing something there that maybe we shouldn't trust that much. If there was a gap, maybe it's just thin as a hair, maybe there is just a small liquidity there left over, and that could be partially bullish to come back to the scene of the crime and hit 115. After all, if we put a line in here, that is or was support, so coming back for a retest because we haven't touched that level from below yet, this puke before doing that could be on the table, and that's why I would attack that liquidity at 115.3 with a small position just in case this still wants to go to 107 first. By doing that, if I get into 107 and I want to average down again, I don't have to do it with an enormous amount of liquidity. And look at the Bitcoin status. How helpful is this? We had a breakout on the price, but not on the RSI. That ended up failing because it didn't follow the trading Parrot instructions to be bullish, which is momentum first. Then we had a breakdown from the symmetrical triangle that started on Saturday. I did this on Saturday. CPR pivot still resistance. On the daily, we got rejected by the resistance on the daily, and we talk about going to the bottom of the range, not the bottom, but the next support on the daily. We have done pretty much all of that so far. Let's do a little bit of cockiness in here, and let's also appreciate what happened. Symmetrical triangle, breakdown, come back, try to retest, try to reclaim at 53, which is the price of 115.7. Couldn't do it, left some fair value gaps. This area in here, liquidity from support, from fair value gaps, from potential thin air CME gap as well. So there is a chance we go and maybe we see a rejection at 115 or 114.7. We are now below anchor VWAPs, anchored to the all-time high. We are below global support on 4 hour since 22nd of June. Wow, that explains the largest liquidation event. We are probably gonna get a buy signal from this indicator called the Crosby ratio that tracks volatility. So in terms of volatility, we're getting in a sweet spot to start thinking long. In the daily, look at this. What the daily is potentially about to confirm tomorrow is a bearish cross, and look how close we are to the daily support. This green line is around 110.8. We haven't got there yet. We are currently kind of respecting this support of 112.5. Last time we bumped into all-time high from the same price. The order block was there. We did an inverse head and shoulder. We managed to get to the target, come back, revert all the progress of the inverse head and shoulder. So now we need to really, the bulls need to defend 112.5. Why is that? Because that defends, at least on the daily, the higher lows in here. We haven't done a higher high, but we could fix that if from here we start pumping straight into liquidity. At that point, we could say, yeah, structure is not broken on the daily. We are just still in this channel down, cleaning levels and just doing zigzags. But either from green is a sweet spot to enter longs, or if we really get lucky as well on the daily to visit the global support. At that point it's at 26. So if we ended up puking lower from here, the next level is 103.5. That will be a lower low relative to the previous low of 108. That will also take the 107 with it. Liquidity pool, you can see that we are still playing fooling around in September sideways within the CPR pivots for September. We have now around 1 week left for September to touch the first resistance of 119.3. Do not touch that. In October, I won't be able to tell you that the model really can do a touch of the resistance for October, which is probably gonna be around the same level as well. And if September breaks below 110.7 and it closes there, we have a chance that we go into 102.2. Let's look at all the range of the CPR just because there's some increase in volatility, so it's good to recognize all levels. 96 is the second support, third support is 85, resistance I already mentioned 119.4, then 135, 136.7. All those levels are within the reach for the month of September. And look what we did on the weekly. We came into the week bull market support band, we pierced it, we did it. We have support next at 109, on the weekly at 105, and if this goes any lower, we either are looking into a double bottom. If we defend that, we need to defend that 107 liquidation pool and not go beyond that. If we go lower, well, then I can say that the bear flag did what it was telling us it was gonna do. You can see how the 117.2 was the perfect rejection so far. That was resistance, support before. Now it is the stochastic RSI on the weekly, the one that could potentially put a bear flag, a bear cross on the low of the range, extending how long we stay slightly bearish. Now monthly is looking with distribution 3 months in a row, like in this area in here. After that we puke and then we reclaim from a lower area. To me, there is enough candles in here with wicks to the upside to say that I cannot really discard further downside because of all the distribution that has been happening around that area. Not guaranteed, but you know, it's better to be on the safer side, at least when it comes to mindset. We are below the lower band of leverage squeeze, and that says that we should be looking for longs. It is safer to start looking now for longs than it was when we were at the top area in here, because this area was with an excess of longs that were taken out constantly with moves down, and eventually we topped out because of the lack of longs. I remind you that I am looking for longs on Ethereum anywhere lower than 4,000. I start with my search. I covered that in multiple videos, including the one from Thursday that went live on Friday. That is the private TA session of elite members. Another friendly reminder that the short-term holder realized price is today located at 107.5. That tends to attract the price, and in a few occasions during the bull market it acted as perfect support. In some others we spent a season, a bunch of months below it, like here, here and here, 3 times to be more accurate. So we don't know if we are gonna do one or the other, or the third scenario, which is even longer time below it. We covered the spot ETFs on Saturday. You can watch that video still. And we are for the first day now in fear. It's been a while that we don't enter fear. Last time was on the 30th of August and before that in June. You can see how the Cerberus indicator now resumes with the way to the downside. So in theory, as we approach the warning buy, we are looking for entries. At least our mindset should be focused on that, not to go all in, but to build along. We have 2 consecutive sells, which is the maximum number of sells consecutive before we have some drop in the price, as I mentioned in a few videos in the past. In terms of liquidation levels, order book, and forensic analysis of the order flow, what can we see? Well, yesterday I say something very important. If we came for the 112, right, because there is not much liquidity in here, as you can see, my bet is that really market maker wants to go for 107. What's the likelihood of that? Well, I will say 60 to 70%. So how can we handle that? Well, we can take a small long in here, but really reserve more for 107, 105, right? That's kind of my way of approaching this. Why don't you wait for this if it's 70%? Well, because with that 30%, we might get faken out and that was it. And suddenly someone discard every fear around empty gogs and we start rallying into liquidity at the top. And I want to have some liquidity exposed to that potential, but not all of it, because it's higher likelihood now that we go into 107. So you really don't know where the price is gonna go. I have no damn clue where the price is gonna go. I just measure likelihood and I plan my strategy based on that, because if I'm wrong and price goes up, I have a long, I take profits. If I'm wrong, I add liquidity on the lower end and that bounces still and I make more. And what if you're wrong with both and price carries on from 105 and it goes to 85? Well, do you think I'm gonna put all my liquidity in here? No. Parrot doesn't like losing. You can argue anything. Parrot doesn't get rich overnight. Sure. Neither I lose everything overnight, which is more important. Okay, let's look at the 30-day. Now we have something more interesting located at 119, but still that 108, 109 is heavier in here. That could bring the price slightly lower. Let's look at the order book, starting with fire charts. You can see that the brown whales are betting big on this particular level of 111, 112, but the purple whales do not give a damn about it. Look at this, how they point fully down this morning, so they are still not interested. Maybe they are waiting for slightly lower. Let's look at Market Monkey Terminal, and what I can see is that they are defending from 111,500 decently, so 1% below the price. We should expect order depth and ratios to be in the green, at least relative to this 400, 800, these wins, right? 2 levels down versus 2 levels up. This compensates so far. Then at 114 is where things start getting a little bit rejection kind of levels. 114. The big one at the moment is 116.5. I guess they're betting big. The price won't be able to reclaim that. You can see that the shorts enter big in here. Do you want to be part of that? Do you want to enter with all the shorts? If you do, go get some coffee, slap your face a bunch of times. We are never in an overcrowded space. That's the first rule of trading. Parrot. Yeah, but it can go lower. Empty goes, blah, 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 blah. Slap more your face, please, until some blood gets into your neurons. Get some fresh air, you know. So here is the big liquidation that happened. In terms of longs, they've been taken out. They have come back, but not that much. So currently, the sentiment of this is that there is an elevated amount of fear. Position sizes, you can see longs are really not yet interested. So this is a good condition to start building a long, as long as it's not too big. Again, that supports that idea. And in the past few days, we were looking at these liquidity levels in the green. You can see that we took 90%. Now there's new levels below it and shorts all over the place that they're going to make me so happy if we enter with a small long and we do some damage to them. After all, everybody deserves some love. Do not deny love to any size of position. Okay, let's look at support and resistance. As I say, there is a little bit of green, 0 to 1%. 2%, a bit of red, 1 to 2, when we find that 114k resistance that is making this slightly red. You have red 2 to 5, red 5 to 10, 10 to 20, and 20%. Oh my god, every single level is slightly red or big in the red. Look at this 20%. Where are those orders? Let's find them. Oh yeah, 122, 130 resistance. There's a lot of levels that want to distribute. Sometimes they put it so high to give you the illusion that they want to sell. Sometimes they do it for the opposite reason, because it also gives that sensation that they are expecting a pump and that price is going to catch that level and they want to get lucky, enter short and short from that level. I think if people continue to have a lot of fear, maybe we develop the conditions for a short squeeze and we can take a very decent long. Here we have some other signal. Let me remember which one is this. This is the anchor CVD. So this one says that there's just too much panic selling with market orders going on at the moment. You can see them in here, and sometimes within those moves we get some bounce back up. Sometimes it tends to be more sticky, like this bottom, like it can coincide with the local bottom, or it can be just another dead cat bounce. But there is one going on right at the moment, and also liquidation levels liquidated so many people that it gave another green signal. We got on the fair value gaps now levels. Let's reuse these ones. You can see there is a fatty one up until 114. Right after that, there is a defense level that wants to sell, thinking that it won't make it higher because this aggressive move came back down. They want a short from 114. Makes sense. I mean, there is some logic behind. I'm not saying that they're gonna, get away with everything playing out the way they envision it. We got some skinny fair value gaps there for additional downside, and the real fat ones start from 107 into 102. That will basically mean that our bear flag did what it was designed to do, right? Let's measure the extension of 1. Let's see how low it can go. It can go to 101 for extension of 1. Golden pocket probably gets into 96, around there. And I'm not saying necessarily that we can achieve that. We're still in a bull market, and this is just something promising for downside. Let's look at general markets. Remember how we closed on Friday? It was something like this, and today we have 661, which is 2 points less than the close of Friday. And on Nasdaq, pre-market prices on the daily, slightly to the downside. You can see that there's been up only from 46 to 76. That's 30 points up only. So some correction currently going on right after the hive and the 3 white soldiers in here on the Nasdaq. Remember that everything to do with empty gogs has no application to general markets. So in here, there has to be another narrative moving the market down, and I think it could be profit taking, but it also could be some of this. Let's look at the gold. It's pushing into all-time highs again, 3.723. Why is that? Why people are fearing? What are they fearing? And we look at general markets before for some incentives of geopolitical tensions, trade war, and all of that. That could be bringing additional motivation to push higher the gold. DXY is at the same level, same reading I did over the weekend, so you can watch that in a separate video. Let's have a look at what's going on with Japan stocks. Nikkei is at the top of the ascending wedge with a hive there. This is Japanese 10-year yields, and Nikkei, which is actually the stocks, I was clicking on the wrong thing, after the hive is just putting new highs. Let's see if we connect this pivot to this one. There is a little bit of damage there in the uptrend. If we connect it with this, that is our support. VIX, let's magnify it. You can see that after the hive we have a gap up on the VIX and the opening this week, or maybe this is pre-market prices. I think if the VIX starts pushing here with another expansion, that definitely has a huge potential for a drop in here after no downside so far. V recovery and not stop. Remember that when indexes like Nasdaq and S&P have a recovery, a V recovery in particular, eventually you see a correction. For example, here in 9th of March within COVID we have a V recovery, and then eventually in August we moved down 15% on the Nasdaq. That affected crypto, Bitcoin, Ethereum, and even XRP puke massively. That was one of my first biggest losses in crypto, I remember. Now I laugh. Probably I could have purchased a Porsche 911 with that loss. Well, I did really great that year, but losing that amount of money is something that I never experienced before in the past. That's why I remember it with some nostalgia. And today I'm going to show you something that I never showed you before. On Trading Different, you can also look at liquidation levels of a lot more than crypto. Look at this on the swing. You have Forex, ETFs, stocks, and they have listed plenty of other symbols. Of course, you can get a discount using the link in the description if you want to sign up for Trading Different. In my opinion, it's a really complete platform if you are interested in liquidity pools. There's a lot more than that, but this is their primary objective, I guess. So looking at the Nasdaq QQQ, we can see that we have a liquidation at 622, but after that we kind of ran out of that big motivation. After that 677 and then 640, but declining sharply. Let's look at the S&P and gold. I'm very curious to see S&P. I think there were some liquidities running out at this level of 664. Then we have a peak at 700, but then right after that again sharp decline. If we focus on all liquidation levels, that is 707. Below the price, well, there is some stuff in here, but nothing like 400. I don't know if we can really go there. That will be a magnificent puke. Imagine like coming from here to here is 36%. I think that's doable. And I kind of want to say that I would like to experience a crash like that, and I would like to forecast it, let's say after finishing with 666. Can we go there? Maybe. And yeah, this is incredible. Oh, I forgot gold. I was gonna do gold. Gold. Yeah, there you go. Let's put all liquidation. Yeah, we got 4,000 and 4,400 are great area of liquidation levels for gold. On the lower end, we got a liquidation at 3,000. The largest one at the moment is 2.3. That is a decline of 37% on gold. I'm not forecasting that. I'm just being playful here. But we are out of altcoin season, guys. Let's measure how long it took. 11th of September to 20th of September. That's a cute 9 days. Can we remain in altcoin season after we pierce down? Yes, we can do that. You can see in here that we came back even to 50 for another leg up to 76. That's March 2024. Here in the bear market, we didn't exit. Here we didn't exit, but here we did. Here we did. So there are some exceptions, and you can exit altcoin season index levels and still remain in altcoin season if you punch back above 75. For that, of course, you need the altcoins to push. But if Bitcoin pukes below and it gets very close to 100K, I will expect this to be into high risk of not continuing. If Bitcoin goes below 100K, it's almost for granted that the index needs to go back into Bitcoin season. This is how the market is looking today. The breakout is still there, just starting the week not so great. Others, it remains there, still not testing even the support, so it can go slightly lower without necessarily breaking fully. In our pattern of USD versus total free dominance, you can see that it hasn't broken down, and I find that great because the last thing I want is a candle close below the neckline and then reclaiming, because that is kind of a liquidity hand on steroids. What I really want is this to fool around or above the neckline and eventually crash back down as low as it can. That can give us another wave of altcoin season. So it's fully confirmed that the altcoin season is gone. Unfortunately, guys, today is not black and white. It's more like a gray area that we can still stay a little bit longer in altcoin season. I'm not gonna tell you anything. There is no financial advice. You are gonna have to decide what to do with your red backs. I think if you're not invested on altcoins, looking for some humble sized longs wouldn't be a bad idea, even though there can be additional move down. Remember, we want the USD to come down, not up. Up, particularly in this direction, is bear market, as we can see here in 2021. And yeah, USD dominance is currently about to put a higher high in here, continuing with the breakout. Ethereum is holding that breakout multi-year support so far at 61, slightly deeper, getting into the 60 means that we are slightly below 4K, and that's where I get more bullish on Ethereum. This could be it, right? Is support being tested, very close to it, but personally I want a little bit more risk reward for me. or I don't touch it. Bitcoin dominance, you can see that now has a larger W, and we're in the beginning of the week, so this has the freedom to go anywhere. Wherever it goes is gonna build a double bottom that can push back up, right? And then after we close on Sunday, we can measure this double bottom and say, well, it could go up until 50, it could go up until 55. The current ongoing candle has the potential to confirm that. It could also sell off the dominance, come back down, and even invalidate the double bottom, because we close on Sunday at 35, which is lower than the 36, 37. We're still holding the support that we flagged from before. Ideally, we want this to break and come back down, but as I say, USD dominance at the moment is playing bullish things for USD, which is not bullish for crypto. Ethereum dominance continues to come back down into 59. So as promised, end of the video, and you're gonna hear a summary of what I think about Bitcoin at the moment and what is my current plan. As I mentioned, there's been a little bit of bleeding on the 4 hour. On the daily, we are approaching the next level of support. So still, this is not a red alert, it's not the end of the world, but we start looking for longs. From where? Well, we are currently at support. So if you are a degen or if you are ready to start longing, this is support. It could hold and we might resume the way up. Personally, I am looking slightly lower, okay? The 110 for me is more interesting. At that point, we do touch the green line, and if we lose that level, I am looking for other longs at a range of getting closer to the 26 on the daily RSI. That could be interesting as well, particularly because at that level we're gonna meet with the first order block in here. We do have other order blocks, we do have other levels to watch out, like the 103, 107, 109, and all of that. So if people continue in fear, we're gonna get some decent longs to play with the rest of the week. Hopefully we catch some of the upside if there are some dead cat bounces into fair value gaps that are being formed at the moment. To be fully honest, I love having a bearish September. That is according to seasonality. If we get a bearish September, of course we're still in the green, but getting a -5, -7% September will feel really refreshing to catch amazing longs into October and November. If we get a bullish September, then we get this narrative of it's gonna just carry on in October and November and everybody's gonna buy into that, and maybe then we get bearishness in October, November, and everything is upside down. So I have a bias or a preference. I could say I feel a lot more confident trading longs during the bearishness of September. What can I say? That works really well every cycle. Hopefully this cycle we get some of that. I've been pretty much all September thinking that that was gonna be my plan, but we started having this upside, so now it's time to start acting and looking for longs. I hope you appreciate the very long video. If you do, hit the like, write down a comment down below, share with your friends, save your friends a few bucks. They're constantly losing money. Make them watch some videos, convince them that they will eventually learn that the effort is worth. If you do that, thanks so much. I'll see you in the next one. Bye bye.